Is the Fed losing their ability to control interest rates? Now what?
All right. Well, the cool thing is that they are losing a little bit of the power, which is nice right now because we all want them to be looser. We want them to be fiscally dovish so that we could all enjoy very low interest rates for a long time. But that comes with a price, doesn't it, Don?
All right, so good thing you're here on the National Real Estate Cafe, where we're going to go through this little topic about the Fed losing a little bit of their power controlling interest rates for the first time in 107 years, possibly.
I know. So what does that mean? So first of all, why does the Fed exist? The Fed exists to add some sort of checks and balances to our banking system. It is actually a private institution. It is not the federal government. But what it does is it helps banks have reserves. It is the backbone of the reserve system for our banks. So what they do is they maintain maximum liquidity for the banking system, and they supply a fair Fed's funds rate for holding those reserves. So it's kind of like a CD, but for banks.
Right.
Okay, so if the banks are putting their money,
safe CD,
super safe,
right?
Super safe, super liquid. That's very important.
Yeah.
Okay, so the bank can put its money there and take it out as fast as it wants, whenever it wants. So why wouldn't you put your money there? Well, you wouldn't put your money there if you had a better place to put it, just like any investor would.
Right.
So what happens if the banks suddenly start realizing that, hey, our consumer's pretty safe too, and we're charging them 8, 10, 12%, but the Fed's only giving us 2.5 or 2.25 or 0,
right,
which is what they were giving. So when the banks needed extreme safety, 0 was fine.
Well, and 0 is fine. Right now, they're getting 2.5,
and that's fine,
right? But if at prime, which is the base level of any bank that's lending rates, pretty much base level is 5.5 now, always 3% above. But they're actually usually have margins above that, so you're in the 7s and 8s.
But then you got to subtract the risk. So let's say the risk is minimal right now; it's only 2%.
Right.
So you're still making a lot more than you were if you were giving the money to the Fed funds to hold it at the Fed. So what the Fed is raising interest rates for is to make sure that the banks keep enough in reserves, so that there's enough safety in our banking system. That's really what they're doing. So if all the money supply was to come to the street, and there wasn't enough in reserves, we would spend it all. There'd be no reserves, and I think that's happened before in a couple different countries like Argentina.
Yeah, you've seen that before.
Yeah,
Called inflation.
I've seen that movie. Massive inflation. So what they're doing is controlling inflation by controlling the money supply. And Dennis Kotzman in our office and I have this conversation all the time. Money supply on its own is not a problem, but if it starts to exchange hands and the velocity of money changes, now you've got a problem on your hands. So don't judge the Fed. I know Trump's angry at the Fed. We get angry at the Fed sometimes.
Well, that's only because it's the amount and what they're talking about. Any adjustment to the economy should be based on the actual numbers. A lot of times, I mean, for quite a while, Powell's just been going, we're going to raise this many times over the next 2 years. How do you know where the economy is going to be in 2 years? Are you kidding me?
Well, that's crazy. But the other thing is, he's working on this problem, not on whether the economy is healthy or not.
Correct.
This is a bigger problem that could destroy the global economy.
Well, there's too much reserves right now.
Too much on their hands. They need to get rid of this balance sheet. They need to get that money liquid, but not too quickly.
There we go. So we'll keep you informed of what the Fed's doing, but there are some methods to the madness of why they have raised the interest rates. But at least the verbiage is changing to where they're going to see what's going on with the economy moving forward. Stay tuned on our daily basis to keep in the know, and you can get these sent right to your phone by texting NREC to the number 58885, and you can always find out more at donandgino.com.